This video is going to be a little different, but I'm going to talk about the actions I take along with risk tolerance to make sure that I'm profitable and how I track profits. That way I never make a bad trade. So, for example, you guys are looking at my swing trading journal. As you can see, obviously the green are wins. I show percent returns, I show my averages, and my target prices and why. Why is this so important? This is important because you should never enter a trade and not know why you're making the trade. So for like swing trades, it's really easy to be like, okay, listen, for example, Max N, one of the longest EMA 20s for penny stocks, and it should get 10 to 20% gains going back to that EMA. That was the reason why I entered that trade. I ended up getting into the trade at 17.55 and I ended up getting out at 19 cents even though my target price was 20 cents and it took me 2 days. But with swing trades, you're able to do that because you're buying and you're holding on to them. Options is a little bit different. My day trades, I document these after, so there's no reason why I'm getting into these plays at the time, but I'm still tracking my returns and how much money I'm making. That way, I have a good idea on like a P&L and how good my strategy is doing. So the strategy that I've been posting about for the past few weeks is that 15-minute zero DTE strategy where we use the 15-minute candle at 9:45. We look for the trend channel break, and then the third thing is we look for that EMA 5 or 10 retest, and then enter the play. And as you guys can see, the results are pretty good. I've had 2 losses the whole time, and it was Tesla for 12%, and then it was Google for 35%. The one thing I will say about Google is I completely went against the strategy and I didn't do it. I ended up entering the trade before we had the EMA 5 retest, and that is why that went so poorly for me. And another Tesla puts, but I didn't realize about the news for Tesla at the time. I can't remember exactly what it was. Um, but for the most part, 4%, 15, 18, 8, 10, 10, 12, 12, 20, 20, 17, 17, 17. These are winners, right? So even if, say we're trading $100, right, and I have these 3 trades for $16, that's $48 I just made, right? So for this one loss, this my biggest loss for sure, right? My one win or my 3 wins outdo that one loss all day, and you can see I have a lot more wins than losses. Second of all, when I say never to go against your strategy, this will force you not to. Because in the notes section, I go why I'm entering into these plays. Most of the time, it's because it's been a long time since the EMA 5 has been touched, right? It's okay to trade with different strategies, but it's not okay using a strategy that's not back tested based off feelings of the market. And I understand that the market always doesn't present, then don't trade, right? A very few percentage of you people trade for a living and you need to make trades and you need to force trades to make money. Most of you trade on the side. So this is by far the best way that I have found, right, to track wins and losses and see what you could have did better. Because at any point I could go back to the day trades, I could go to Google setup, right, with the date that I entered in it, and I could backtest it and be like, what went wrong here? Was this a one-off? Did I do something wrong? Did I rush into something I shouldn't have rushed into? How could I do to fix this so it's not happening again? And being realistic with you, Tesla is the one that has had 2 like one-offs. As you can see, there's other Tesla trades that win, but Tesla's just one of those companies. Spy haven't lost yet. Apple haven't lost yet. QQQ, Meta, Amazon, Classic, none of them have lost with this strategy. This, the second thing I want to talk about, and we're going to look at it on the actual charts, is we need stop losses, right? Stop losses are so significant, right? We need target points and we need stop losses. None of this is a guess. Nothing with trading is guess. It's not gambling, it's not guessing, it's not feeling, it's not emotion. It's what trading is it's you have information in front of you using indicators and you're making the best logical decision that you think at the time based off the information that's in front of you. There's millions of different strategies, there's millions of different indicators, how you pair them together, how you use them together, and what instances do we think that this is going to happen. And a good trader doesn't gamble, right? So this is a setup that I had today. I'm going to go over in a YouTube video. So we draw our horizontal lines at our 945 candle, which is this candle right here. Remember, not the wick, just the body, right? We have a bearish outbreak, but we need an EMA 5 retest, right? We get this EMA 5 retest right here. Now, entering into this trade, right, you have to remember that this would be scripting during real time, real life hours. So we wouldn't have this sense of security that this was going to close on the EMA 5, but what you would have had is you would have had proof that it was going to close 3 or 4 minutes prior due to the volume analysis, right? As we look at the volume analysis and you see it's scripting, there's a ton of bearish volume. We can assume that this is going to touch EMA 5, and if it doesn't, then we can get out of our play. So I ended up getting into play while this was scripting here. Now, when I say we're using the EMAs as price gauges to determine entries and exits. So for example, if we get into puts and we get in at this EMA 5, this yellow line, we could use the EMA 10 or the EMA 20 for a stop loss. That way our trade doesn't go too far bad, right? If we enter a trade in here and the next candle we're at the EMA 10, okay, we'll take break even profits, or maybe we'll lose a few cents, right? It won't be anything. But if you're just banking, SPY's gonna have to go down by the end of the day, and if it does, and I'm out my options with these 0 DTE options, you're gonna completely get destroyed. The time decay on the theta is gonna rip apart your contracts. They're gonna expire worthless, or they're gonna expire at whatever time you decide to sell it, and it's not gonna be good. What am I looking for here? A win's a win, right? It's not like we're looking for the knockout. We're not looking for the home run. We're not looking for the next Bitcoin. We're looking to make a steady amount of money off of our investments. So, for example, we got in here, I ended up sitting at the lower ATR4, meaning we're completely undersold, and then look what happened. We shot right back up instantly. It became support and resistance. If I would have stayed in this play at 12 o'clock at noon, the volume dies out for the day. It wouldn't have been any good, right? Time decay would have destroyed me. When trading, you got to have a goal in mind, and that's going to bring me back to here. The goal. The goal is to make money. The goal isn't anything else. You can have a strategy going into a play, but when you're in a play, all of that goes off the table if you can't maintain structure. Structure is very important. This is like sort of technical analysis, but this is also mindset that risk tolerance is everything. You shouldn't be gambling 50% of your portfolio every day on options, right? That's how you're going to go broke. You should be gambling 5 to 10% if you have under $5,000 portfolios. And then if you're at a 10K portfolio, you shouldn't be gambling more than $500 a day. Because what you're doing is you're building repetition, you're getting practice, and you're learning how the markets work more and more and more. And then once you've done this for 3 or 4 years, you can get more comfortable, move into different strategies maybe that are more complex, look at more things like earnings and look at the news, or you can start trading fibs and time zone fibs. There's a million options you can go, but as a new trader, tracking wins, setting up these habits now to make a good foundation for yourself as a trader is by far the smartest thing you can do. It beats any information you have, and getting in the markets, even trading one contract or swing trading five shares, trading $25, right? You trading $25 50 times is going to make you more experienced and more well-rounded as a trader than buying one play for $500, right? It's all about experience and time, and those are the measures that I do to make sure that I keep myself safe and I track profits profitably. That's the methods I do, and those are the two methods that I do to make sure I don't snowball down with bad trades, and so I can learn off of my old trades and make sure that my risk tolerance is on check and on point.